What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today I'm looking at Mogul's latest pad split in the Atlanta, Georgia market. It is the Bernard. I didn't get any email about this one. Apparently, some people did. It looks like it just came out earlier today. Already about, well, what is it? Not two-thirds sold out. How much equity are they raising? Their total offering is 141,000. They've already sold, what is that, 80,000 basically. So more than halfway sold out already. Uh, which just seems to be the case with their pad splits, right? They're selling them real quick. This is not a huge raise for them, so I don't expect it to last very long. But I'm going to do my normal due diligence, and we'll see what we've got going on here. Um, it's 7 bedrooms, 2 baths. So this is one of the things, I do like when it's the fewer bedrooms, I think the less risk you have in the pad split model. It's also in Atlanta, which is, I believe, pad split's first market, and it's a very mature market for pad split. So I don't have a lot of worries about their model being attacked going forward because I think that they've done a lot of work there. But of course, there's always that risk that somebody comes along, creates new rules, and all of a sudden you can't have 7 unrelated people living in a home. Although PadSplit's position is they're not unrelated, they're all members of our. Anyway, uh, what do they have to say about it? So this is one. It's not an operating PadSplit. So a lot of the ones that I own in the Georgia market or in the Atlanta market were already operating and are doing well. So I have um, the Ven, the Ratliff, the Mafee, uh, maybe the I don't remember what else, but I have several that are in that market, and most of which are doing okay. Some of them have had little hiccups, but overall, I've been very happy with it. It's even though this is going to be a new one that they're the seller. So the seller recently bought this property. They bought it in December. It looks like they're adding a bedroom, maybe doing some renovations. I'm not sure. I couldn't find pictures from the last listing. Uh, furnishing it, listing it on PadSplit, and then we're buying it from them. Um, this is a model we've seen quite a few times now from Mogul. I think it makes some sense, although there's been some discussion in the Discord about, well, somebody else is profiting off of doing that relatively low risk work, the renovation and whatnot. And so I think that's fair. And one of the things I want to look at is, okay, how much are they really making? Are we giving up a lot by not doing this part of this deal ourselves? Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I currently invest in fractional real estate online, Mogul being one of them. Feel free to use any of those links, but do your own due diligence on the platforms and the properties. Just because I buy something doesn't mean it's a good investment for you. Um, some of them give you some free money on your first investments. Some of them say they will, and they don't seem to be at the moment. Looking at you, Lofty. And then some of them are just pure links because they don't have any sort of referral thing. But again, just because I'm providing those doesn't mean that I'm saying you should invest in them. You really want to dig into each deal individually, each platform individually, understand the risks, because some of them it's borderline gambling. Others, I think they're a little bit more established, but you want to check into that on your own. Also, in the description to this video, I have a link set up to a Discord channel where about 200 of us are talking about fractional real estate investing on a regular basis. I have recently been told again that people that have joined that channel have been approached in the DMs by people pretending to be me and selling them services. If you see that, that's not me. I'm never trying to sell you anything in the DMs, not an investment service, not nothing whatsoever. If you want to buy individual properties in San Antonio with me as your agent, that's another discussion. That's not what that channel is about. But anybody trying to sell you anything else, and even that, I mean, I'm not DMing people trying to get them to do that. So please be careful if you do join the Discord group, because I guess again, somebody was taken. Somebody was fooled by that, and so you can always just ping me in Discord itself. I have the little green official label in there. But yeah, if you think you're talking to somebody but they're trying to get money from you in any way, that is not me. Anyway, back to this. Okay, sorry about that. Just I've had it's come up a few times lately, and so it's something I want to really make sure people are being careful of. So what do I think about this property? Well, it's in the Atlanta market. It's a market I like. I've talked about this market quite a bit. Strong population growth. I think long-term trends should look good. But if we look at the short term, in this specific zip code, we see, median housing prices are down 8.5% in the last year. Um, that's one of the strongest downtrends for the last year that I've seen. Zillow thinks it's going to go up 1.1% next year. When we look at this line, we don't see the bottoming out that we see in some of the other markets. So that I thought that was kind of interesting. Um, Maybe we're buying the dip here, right? Because if you look at this estimate for this property, it's less than it was, a year ago. But I don't know. Okay, so I guess let's start there, right? Well, let's start with the easy stuff. Stuff we always look at, FEMA flood map. I didn't see any flood zone anywhere near here. I think you had to zoom out quite a bit, yeah, before you saw some over there. So I was glad about that. Used the spot crime map. It did have to zoom out pretty big to fill the map. Each of these gunshots were actually somebody that was shot, unlike some of the other crime maps we've seen where you see these gunshot things showing up, but it's really like somebody reported hearing a gunshot and there wasn't necessarily any. So that's important to note. People are actually getting shot in this general area. Now, when you really zoom into this neighborhood, um, and this is over the past 2 or 3 weeks. There wasn't really a ton of crime in the immediate area. Although this, I believe, was a car theft. So you are seeing some real crime here. I didn't pull up the neighborhood scout. Um, that's something obviously if you're worried about crime you want to do. But looking at the zoomed in view and understanding that most of the pad splits that we're looking at, especially in markets like Atlanta, are just going to have not the safest looking map. Um, this was, I think, better than I expected. It's definitely better than some of them that I've passed on in that market. Like I believe the Prince, when I looked at that one, that was the main reason I didn't invest in that one. But anyway, it is what it is. It's not certainly not the safest area. When you do start to see some actual gunshots and so a lot of assaults and whatnot. But again, when on a more granular basis, we look pretty good in this immediate area. Let me see if I can look at that map view. Yeah, so like if you look at it like this, I mean, it appears somewhat, pretty suburban, little, spread out homes, lots of trees, bigger lots. So and I think that's sort of indicative of why it sort of picked up, some of these areas or, some denser areas or some maybe commercial spots too when we were looking at that map. Um, One of a couple things that we're always looking for, parking. Well, this isn't great parking on the property, but there is plenty of street parking because they are large lots, and it looks like you can park on the street, although it wasn't I wasn't 100% sure when I was doing. You can see, okay, this guy's actually like pulled onto the lawn. Maybe that's really what you need to do here, because you don't see a ton of cars just parked in the road. But I also didn't see any signs when I was doing the street view that that showed no parking. So there's this, yeah, there's not like any no parking signs, but it doesn't. It's not a very wide street. But again, like, and I didn't see anybody actually parked in the street when I did this. So not 100% sure um, if that's an issue. I mean, obviously, you could pull up on here, you could add some parking. I thought this was interesting that their mailbox was broken in this picture. This is just not, this is really because you can't do tandem parking here when you just have roommates. You're really just putting one car there. And so you're either just parking in the street or, you've got to come up with some other solution here. Um, but there's definitely the space for it. And then this is extremely close to bus stops. There's one here, and I think there was another one. Yeah, another one there. And that's, especially in certain markets, I think uh, that seems to be really who most of the pad split, most of the people using pad splits are relying on public transportation. And so having a really close bus stop, and the ability to add parking if that becomes a problem, I think we're all set from that perspective. I mean, I'm perfectly happy with it. I didn't dig into the pad split projections, in large part because I'm trying to get a video out before this is sold out. But also, Mogul's operating a whole bunch of pad splits in this market now. I think that, between them and the manager, they should have this number pretty dialed in. And I have, so I've really just come to trust them on certain projections that they make. Now, obviously, just because I do doesn't mean that you need to. So if that's something that you want to dig into more, please do. And, feel free to share that in the Discord. I mean, there's a lot of people, especially, I feel like in the Mogul section of our Discord is where we have the most collaboration for due diligence for properties. Probably because, we have no competition for cheap tokens, right? Everybody's just paying the same price. And they put them out on a very regular cadence. We get basically one a week. Sometimes a little more, sometimes we wait a little longer, but please do feel free to jump in there and share your thoughts on this property and any additional due diligence that you do. You'll see lots of people have been doing that. I always like to shut off this refinance. Well, I don't even think mention. So again, they're saying this is a core plus. The seller is converting it to a pad split, but it won't be fully stabilized by the time we get it. So yeah, maybe I think that's a reasonable. And saying okay, 12% average yield, 12.2% IRR. Let's shut off the refinance and see how much that affects it. Yeah, almost a full percentage point. Um, Not a huge amount. You're still over 11%. We've seen in general just that average number go down from what we used to see from them. It's tough to know. Are they just being more conservative in their estimates, or are we seeing a lower quality deal than we were seeing before? Or were they overly ambitious with their earlier deals, and this is sort of the returns we're going to get for all of them? I'm not sure what the answer is. Year one yield is supposed to be just under 8%. Um, for this type of business model for pad split, I'd really like to see a little bit stronger number than that. Um, it seems like that's just what they've been able to find lately, though, and so it's 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 tough to know when you start to compare Mogul deals to all the other platforms. They are still superior, right? Like you still see, I mean, and again, just my opinion, we are seeing higher stated yields. Like, okay, so yeah, 7.9%. That doesn't seem like a great year one yield. Well, that would make this the best, if it hits that number, it would be the best performing property on ARC 7. We saw that in their, you saw the video I put out yesterday. ARC 7's very best deal last year or last month was putting out a 7.9% yield, somewhere around there. So, um, keep that in mind. Like when I'm saying, oh, well, it's not nearly what it used to be. Well, or, what their earlier deals were in the context of everything else that's out there, they're still pumping out deals that I think are, above average deals. Now, this is I'm not sure what ARC 7's, what their best deal was, if that was a short-term rental or if that was just a long-term rental. They're not doing any pad splits as far as I know on there. So it was one or the other, obviously. But you have to keep that, the business model in mind as well, right? When you see, okay, a 7.9% yield on a short-term rental is less impressive, especially if it's a 1 month, right, than it is on a pad split, because pad split tends to be a little bit more stable, and that's less impressive than you would have on a long-term rental, because again, that's even more stable. Um, so I don't know. I feel like I'm still okay with that. My general issue that I've had with a lot of the pad split deals have been, I mean, a lot of the Mogul deals lately have been what they're paying for the property. This one I'm kind of on the fence about. It's not too far off. If you look at their comps, I mean, they're doing the same thing that they've been doing. It's just really cherry picking comps. I mean, this is the property. If you do like a trip to all three comps, you've had to drive 5.1 miles, right? They're not just picking up stuff that's in our subdivision. Um, let's say, yeah, this is where we start, so we're going all the way over here and over there. And I just hate that they do that. I'd like, and I understand maybe that's what their appraiser's coming up with because they believe there's more value in this home, and so they're having to reach to like come up with a way to do it. And the value is really from the fact that it is, a business, the yield that they're able to spit out from a property that's a pad split property. So maybe over time, we'll have a better way of valuing these. But one of the things that I always like to look at is, okay, what if we went and bought this property? Um, did the work ourselves. So the seller who's selling it to us, they bought this for 225, and change. I think in December, right? It just was closed, and you can see earlier or last year, Zillow thought it was worth quite a bit more, but that estimate that home prices went down quite a bit, and so okay, 225. It had been listed for 232. Was that a great deal? I don't know. What was the condition? I'm not sure. Like this sort of stuff, I'd love it if Mogul gave us more clarity about, right? Like, okay, what did it look like? I didn't see pictures from this past listing, and I don't know if they were taken down or it just doesn't work the same way it works in my market. Because in my market, I can always go back and find the older pictures from the last listing. Anyway, only saw this outside picture. So, okay, so 225, and we're buying it for 290. They're furnishing it. They added a bathroom, or I mean a bedroom. But what else do they do, right? Was it a major renovation? Because if so, I mean that's only $65,000 difference, right? If I wanted to buy a property, add a bedroom, furnish it, get it up and running, there's no way I'm doing that for less than say 25,000. And so, are they making $40,000 on this deal, or was there even more renovation done? I mean, obviously, it looks like they changed the front door color, right? That's you know, I don't know. Stuff like that is pretty common for flippers to do. But again, I don't know how old this picture is. Um, is it all new flooring? How much do they have to move ductworks? Because you can see when they are adding bedrooms, a lot of times one of the bigger expenses are you think, oh, well, you just got to put up a wall and a door. Well, no, we've got to make sure we have HVAC ductwork going throughout. We have to make sure we have, enough outlets and lighting fixtures and stuff. So sometimes it's a little bit more expensive than people expect. But I don't think it was a $65,000 project. And obviously it wasn't, right? Because that seller is needing to make some profit on. They bought it, they took the risk, they put this work into it, and now they're selling it. And so, and they negotiated a little discount too. So, would we be better off if Mogul was buying this and doing this? Maybe, right? But we are getting it with a little bit de-risked because that work is being done. It's already being launched. I think it's supposed to close, yeah, February 20th. So, a couple months down the road. So I'm not. This is one that it's we've seen these where it's like 100,000 or 150,000, and I think that that's absurd. This one I don't think we're terribly far off. Like maybe we're overpaying a little bit, but oh, and let me actually, if we look at the Redfin estimate, it's 237. So okay, if we were buying it for 237 and then to get to that 290, because again, this is the estimate without knowing it's got the extra bathroom and that's the furnished and it's up and running. And so, if that's a true value for it, okay, well now we're doing a lot better. Um, what are we at? 43, 53, yeah, 53,000 or $52,000 in expense. Yeah, I still think we're a little bit overpaying there, but it doesn't seem egregious. But that's the Redfin realtor. And you always have to do this stupid thing where you scroll down and then it pops down. They give you the estimate 230. So yeah, okay, now we're at $60,000 difference. Um, I don't love it, right? But it's not terrible, but it's sort of right on the cusp of where if I wanted to buy this one, I'd be a little bothered that we're overpaying, but it's not so egregious like we've seen before. And then especially because you're just not going to get every seller to agree to do these things for us, right? And again, if we have to do it ourselves, we have the execution risk. It's maybe just not what Mogul is set up to do, right? And it's you have to, if they were going to do that, you have to think, well, they need to build some profit in for them to do that, or some overhead and profit for them to be the one that runs that. I know we have that one property that I bought a piece of a couple weeks ago that is their business plan that they're doing on it. So I don't know. I'm kind of on the fence on, are we overpaying? Is it really just like we're actually getting the value that we are, that we're paying for? But then, and then I go back to, well, and is it okay? Is a 12% yield for a pad split? Am I happy with that? Do I think I should be, or 12% average yield over the hold period, 12% IRR? I mean, this is what, we were looking at sort of mid-teens before. A lot of their advertising shows 18% average, because I think they only have one that was fully exited, and that's the one that they're advertising. Okay, that yield. But obviously, most of the ones that we've seen lately have been in this 11, 12, 13%. Um, I still think it's better than we're getting most places, especially because we're getting the true benefits of ownership as far as I'm not getting paid a dividend here where I'm being taxed on it, right? And that's obviously not tax advice, right? Your individual situation is going to be different, but we're getting a K1 here, um, where you're, versus getting a dividend where we're paying, if you look at how that affects you, it's going to be different. Those two things are going to be significantly different. And so I don't know. I still think, especially from a yield perspective, I'm going to be better off buying this than I am even the number one performing, you know, uh, property on Arc 7 right now, right? Where their average was like 3.6%, but their number one was like 7.9. But again, that's assuming that they hit their numbers, right? And are they going to? It seems like, I think a lot of this being scaled back is just them being more conservative in their projections, but I have no way to be sure, right? And that's why I've been picking them up over time. I think I have 26 properties. No, I have 16 properties with them right now. Except unless I get really excited about one, I'm not too aggressively buying. This one I'm going to pass on. A couple of reasons. One, I already own several of their pad splits in the Atlanta market. Um, so I'm not really getting any sort of diversification from this. I wanted to see how those perform. And then it is their stated yields on this are lower than the ones, I'd be dragging down my current portfolio if they hit their numbers that they're stated. And I really want to see how this works out. They have a whole bunch of these now going on where the seller has sort of gotten them, has listed them on Padsplit, and we're taking them over with just a month or two uh, of history. And I want to see how well they've predicted those over time. Are they hitting their numbers that they think? Are they really sandbagging and they're actually going to do way better than what they've said? I don't know what the answer to that is, and so probably sometime in the next few months we'll have a better idea, right? As we see more and more of these that have gone live, that have been active for more and more time. And then the other reason that I've been a little bit more conservative on Mogul lately is, their secondary market's supposed to open up this year, and I want to see, maybe some of these deals I'm going to be able to buy for a discount 6 months from now. I don't know what their secondary market's going to look like. Um, so there's no way to be sure, that's true or not. But there's just no real downside for me to just sort of continue to take it slow, and have a measured approach to the platform. Overall, if I didn't have any pad splits in Atlanta yet, and like I said, I don't really feel, you guys know where I think about yield is temporary, basis is forever, right? And I don't hate this basis. I'd much rather see us get a better deal than this, but I think that it's within the realm of possibility that, like, if we were going to just go and execute this business plan on our own, we're going to spend, we'd probably be all in somewhere similar to this, is my guess. Yes, I think there's there's profit being made by the seller, but that would be, the additional profit that I'd want to make for taking the time to manage a process like this, or um, to take that additional risk of construction and whatnot. So anyway, that's all I've thinking about this one. If you've invested in this one already, or if you're thinking about it, let me know in the comments or in the Discord. Why. If there's risk factors that I missed, obviously, I didn't spend a ton of time on this one. It just came out today. I'm just trying to get something out before it sells out. Just sharing my thoughts on the way I'm looking at it. Trying to check some of the boxes that we're always looking at, but I am always curious when other people come up with different thoughts about, okay, what's another reason to not buy this? I mean, those are my favorite, right? Like, obviously, if you're buying it, I'm happy to hear about it and know why. If you think there's additional upside, that's always interesting too. But as far as like, if there's more, if there's more risk than I'm seeing, please do share those as well. In any case, that's it for me for today. Until next time, I'm just going to keep making mistakes so that you don't have to.